Hello, good morning. It's Thursday the 3rd. I'm FX Blue and this is the market brief. So the MPC meeting, that's due in a couple of weeks' time, and the Bank of England is of course fully focused on fighting inflation now. However, there's still a degree of uncertainty around whether we will see a third consecutive rate hike this month. This is because the Bank of England face a bit of a problem. Ultimately, the MPC need to take the economy, or may need to take the economy, close to a recession in order to bring inflation back under control. And nobody wants that. But the latest increase in oil pricing will certainly add to inflation and dampen economic activity. So it's a bit of a hard one to play. The Parliamentary Treasury Committee is concerned. They released a report that expressed concern that Sunak's decision to raise national insurance to increase NHS funding will drive inflation higher. Sunak, he piped up in response, and he's also concerned. He's concerned that the UK public finances are vulnerable to the war in Ukraine as inflation rises and growth begins to slow. He's due to make his spring statement on March 23rd, but there shouldn't be any significant changes to his November budget since the deficit for the current financial year is lower than had been predicted. Well done, Rishi. In the markets, we had another pretty volatile day. Sterling fell to 132.70 against the dollar, but did manage to recover most of the losses. We open around 134.15 and around 120.80 against the euro. Now, over in the US, Powell has been on. He's been delivering testimony to Congress. He spoke of the determination of the Fed to begin their rate tightening cycle despite the turbulence in financial markets. It sounds like Powell will vote for a 25 basis point rate hike, but some of his colleagues are more hawkish and want to front load the rate hikes to catch up with the curve and help combat inflation. But Powell is also concerned. So much concern this morning. Powell is concerned about growth, given the conflict in Ukraine, and he believes that gradual hikes will be more conducive to supporting the current level of growth. He acknowledged that 7.5% inflation is unacceptable and it will lead to increased wage demands. He said the Fed cannot expect workers to take a significant cut in real wages. Andrew Bailey, take note, sir. A central bank cannot expect workers to accept a cut in real wages. Do your job better, maybe earn that £575,000 publicly funded salary, and maybe the wage inflation risk wouldn't be such a problem. Anyway, in the market, the dollar index continues to benefit from the safe haven trading. Yesterday it topped out at around 97.85 and euro dollar managed to recover from 110.60. We open around the 111 mark once again. That's it from me. Have a great day.
If you do not have a clue, then just tweet through and ask FX Blue.